Good day, everyone. Today we are examining the Spousal RRSP, a financial tool with many benefits, but also a few restrictions which are important to be aware of. We're going to start by explaining how the account works and illustrate that with an example. And finally, we will look at an important restriction to be aware of, which is the 3-year Attribution Rule. To skip directly to the sections, please refer to the timestamps in the description below. Let's get started. At its core, a spousal RRSP involves a contributor, who is the spouse that puts money into the plan, and an annuitant, who is the spouse that legally owns the account. Unlike a standard RRSP, where the person who saves is also the person who owns the funds, this structure allows one partner to use their own contribution room to build retirement savings for the other. The primary goal of this arrangement is to facilitate income splitting, which can lower a couple's overall tax burden by ensuring that retirement income is distributed more evenly between two tax brackets. To illustrate with a concrete example, consider a couple where one partner expects a retirement income of $100,000 from various sources, while the other partner has no independent retirement savings. If the high-earning partner withdraws an additional $20,000 from their own individual RRSP to cover living expenses, that entire amount is added to their $100,000 income and, in Quebec, would likely be taxed at a marginal rate of approximately 45%, resulting in $9,000 in taxes on that specific withdrawal. However, if that $20,000 had instead been contributed to a spousal RRSP and is withdrawn by the partner with no other income, that partner can declare that withdrawal as income on their tax return. Seeing as the withdrawal was strategically shifted to the spouse in the lower tax bracket, the household's total tax bill for that year is reduced, thereby increasing the net amount of money available for the couple's retirement needs. The most complex aspect of this plan is the 3-year Attribution Rule, which is designed to prevent couples from using spousal RRSPs for short-term tax avoidance. This rule dictates that if the lower income annuitant spouse withdraws funds within the current or 2 preceding calendar years, that income may be attributed back to the contributor and taxed at their higher rate instead of the spouse's lower rate. To simplify the timing, you can think of this as the 3 December 31st rule. Essentially, contributions must remain in the account for a minimum of 3 year ends before they can be withdrawn at the annuitant's tax rate. It is vital to note that any new contribution to any spousal plan for the same spouse resets this 3-year clock for the entire balance of those plans. For example, if you have contributed for 10 years but make a small contribution in December 2025, a withdrawal in 2026 or 2027 would still trigger attribution back to the contributor. The only common exceptions to this rule are if the spouses are living apart due to a relationship breakdown at the time of withdrawal, if either spouse becomes a non-resident of Canada, or if the contributor passes away. When it comes to withdrawing funds, Quebec residents will notice a distinct difference in how taxes are withheld at the source compared to residents in the rest of Canada. In other provinces, financial institutions generally apply a single federal withholding rate of 10%, 20%, or 30% depending on the size of the withdrawal, which serves as a combined prepayment for both levels of government. However, Quebec withdrawals are explicitly split between 2 jurisdictions. Generally, withdrawals are subject to a federal tax ranging from 5% to 15% and a separate provincial tax from Revenue Quebec. Regardless of the geographic location, these withholdings are merely prepayments toward your final tax liability, and the actual amount of tax you owe will be reconciled when you file your year-end returns. Because the spousal RRSP involves using one person's contribution room to benefit another's future tax bracket, it requires a high degree of coordination and a long-term perspective on the couple's relative incomes to ensure these withholding differences are accounted for in the household budget. In conclusion, the spousal RRSP is an effective strategy for tax-efficient retirement planning, but it carries strict rules regarding the timing of withdrawals and the legal division of assets. This presentation serves as an overview of the mechanics, yet it should not replace professional advice tailored to your unique financial situation. If you have any questions and want to review various strategies that may be applicable to your situation, feel free to send me an email in either English or in French. You'll find my contact information in the description below. Have a great day, everyone.